Another big topic is that we're seeing a lot of miners or a lot of reports of miners pivoting into AI. Do you think that that is because it is an evolution of business and it's just adding another revenue stream? Or do you think that they're responding to the distress of the market?
I think it's a bit of both, and it depends entirely on which company you're talking about. I think that the first thing to do is establish that this is not a choice that's available to everyone. The common narrative presents that this AI pivot as binary for all miners, but the reality is that most of the mining sector, for the most of the mining sector, it isn't. Three structural constraints make it impossible for many miners to do the switch. The first is infrastructure. AI and HPC require liquid cooling and high density power delivery. Most air-cooled ASICs factories can't be converted without rebuilding from the ground up. So there's some miners just simply can't do it. The second is location. Cheap power and AI requirements are often inversely correlated. So remote sites built around low cost energy typically lacks fiber connectivity, grid stability, all these things that the AI workloads require. And then lastly is scale. These hyperscaler contracts with Microsoft, Google, AWS, they require a scale most operators simply don't have. So this pivot is largely a large public company story. And that creates a real opportunity for the operators who can pivot. There's the economics are compelling. For everyone else, the answer is cost structure, hardware efficiency, and active treasury management. And that's where the real opportunity is in the middle ground for the middle ground miners who can pivot, but actively manage their treasury, and can be positioned to accumulate Bitcoin, avoid forced selling, and emerge from the cycle stronger.
Yeah, I think that's it. And I think the conversations that we're hearing from not just the mining side, but also the side of individuals who can provide either debt or equity financing to these mining organizations, they're looking at miners who are either pivoting into AI or looking at miners pivoting into AI, and they're thinking, are they doing this to add revenue stream? And does it make pure business sense to be doing this? Or are they doing it because of distress? And is there a much easier way of doing this, which is exactly as you say, active treasury management? If you're an investor and you're looking into a business like a miner, you're going, oh, what are they doing with their balance sheet? Are they being active in trying to be as efficient as possible and make the most out of what they currently have? And I think that before even considering a pivot into AI, a lot of miners are now looking inwards and thinking, okay, well, the first thing to do is to think of that structure internally. What can we do with our Bitcoin that doesn't force us to sell it? That doesn't mean we have to go out and have a huge amount of capital expenditure into new hardware and things like that. And then are actually thinking, okay, that's probably the easiest option. Turning our Bitcoin productive.
Yeah, I agree. Going back on the treasury management, right now, most Bitcoin miners are still in the pure play phase. They mine Bitcoin, they cover costs, they sell or they hold. But as Bitcoin financialization deepens, as lending markets to mature, as yield products start to arise and proliferate, and as derivatives markets develop, the miners who build these active treasury management capabilities inside of their operations early are the ones that are going to have a structural advantage. The question being asked today by miners, how do I access liquidity without selling? How do I manage LTV? How do I structure these collateralized facilities? Are the early version of what becomes a full treasury function over time. Active treasury management inside mining operations is not going to be a nice to have. It's going to be the direction of travel for the entire industry.